Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, March 31st, 2017. This is the second part of a two-part video on the cannabis sector. Again, we're going over my watch list here. In part one, I spent the better part of that video just talking about trading strategies, how I like to trade the cannabis stocks, and a lot of considerations to make regarding stops, the volatility, position sizing, spreading money around. So I won't harp on that again. This video will just cut to the chase and wrap up on the remaining 28 charts. I covered the top 10. These 10 here. You can see the first 10 in my watch list of 38 stocks. So we'll start here on number 11 and move on through and hopefully keep this video shorter than the last one. All right, so the next one up in the batch is APHQF. Keep in mind, some of these I may have the same stock twice. A lot of these are Canadian stocks or they trade on some other country's exchange, but they also trade on for U.S. citizens. You can purchase these if you don't have the ability to trade on the overseas exchanges. You can buy these on the bulletin board or pink sheets. And this is one of those Aphria, APHQF. Pretty a bearish-looking chart to me. I mean, it's had a heck of a run-up, no doubt, since the lows in late 2015. The stock from lows to high gained about 782%. There was very little volume. When you see these choppy candlesticks like that, you can also just look down below and you see virtually no volume in the stock. But like everything else, the sector, there's a lot of interest. So you can see the volume increasing. That helps liquidity. You definitely have a much easier way to get in and out of these stocks. But as always, I like to say limit orders are preferable, especially if you take a look at the spreads and they're more than a penny or two apart. You're best to use limit orders buying and selling these guys, because a market order, they can fill you wherever they want. Some brokers won't even take a market order on a penny stock or bulletin board anyways, pink sheet stock, so keep that in mind. All right, so what I see here, it had a pretty well-defined price channel, overshot the channel. That's called a momentum-fueled overshoot, little blow-off top there, shot back down within the channel, went on to breakdown, and then back-tested once, twice again, and has now, I guess what I'm more focused on is these two lines here. Let's color code them real quickly so they stand out. We'll make them yellow, and this forms a bearish rising wedge pattern. So this is one that if you weren't already long, then you might want to hold off and see what happens here. Again, be very, very careful shorting these. I can't make investment recommendations, but I can tell you that I've made a few quick pullback short trades on the cannabis stocks over the last year or two. But very, very, very selective and judicious on those positions that I trade and when I do it. So this one, if you wanted my best guess based on the charts, we could power up, make another high, but we're getting close to the apex of this wedge. Now, keep in mind, wedges can extend. If prices move higher, then you have a wedge that looks like this. I'll draw it out for you. Let's just say that we hold support here, because remember, trend line support, i.e. the bottom of this wedge, support is support, and unless and until broken. So we go up and then maybe down, break down later. Maybe we never break down. This is also a horizontal support level here around the 450 level. So look for that. Maybe the stock breaks down now, maybe breaks down later and grabs support. And ultimately, these divergences can be undone. Remember, this sector has a tremendous amount of momentum behind it, and in bull markets, and I'm talking about the cannabis sector as a whole being in a bull market, bearish chart patterns tend to either fail on a more often basis or play out if they do. And for example, and clear out those lines. Let's say the bearish rising wedge does break down, whereas normally the projected measurement for a wedge is the widest part of the wedge, which would take this stock down to probably this support level, and that's still a possibility and a great area to load up. That's about between $3 and $3.25. I don't have the numbers turned on, but you can see all the reactions there. That would be an ideal buy point, but maybe we hold here. Maybe we break down and hold that support level. So food for thought. And again, each of these lines below are support levels. Next up, EMC.V. The V just indicates that's a Canadian Venture Exchange. When you see .V, that's Canadian Venture Exchange is sort of like our micro cap, small cap, bulletin board. Yeah, those are as the name implies, they're venture capital companies, higher risk, lower price stocks. Not a lot. There was virtually no trading, and all of a sudden this thing just flew up here. And there's a little minor downtrend line to watch. I can't make heads or tails of this chart other than this is resistance. Not solid, but decent resistance. We just don't have a lot of charting history to go off of. And there's a downtrend line to watch if you're interested in this one. And overhead resistance levels after that would be the recent highs and this level here. Next up, Signal Bay, SGBY. We have a uptrend line, bearish rising wedge, pretty clear bearish rising wedge pattern. You can see right here. That marks the divergent, the high of the bearish rising wedge. That upper trend line shows negative divergence. That divergence did break down, and it played out, but more so for a correction in time than in price. By that I mean we had a little bit of a sell-off there, and for the most part we moved sideways since, so a correction more so in time. Now that then formed this wedge type pattern. And you have divergence. You have some mild divergence down here. You can see here a little bullish divergence under the wedge. We didn't have bullish divergence on the RSI, but we were overbought right here. Oh, I'm sorry, oversold down around this level. And we also had horizontal resistance right at about the 2-cent level. So what happened on this one recently was a breakout and a back test of both the upper downtrend line on the wedge as well as that $2 level. So that's about as objective as it gets. The one thing lacking on this breakout, I will say, is volume. Breakouts that occur on average or below average volume have a considerably higher failure rate. I would have liked to have seen volume expansion. With that being said, it is absolutely not a necessity. And what you want to watch for, you can go long now if you'd like, with a stop below that level. Next support would be down here under these reaction lows, and there's a pretty decent support here about I'd say that comes in about 13 or so cents. But so you're looking for a move up, ideally on volume expansion. And as with any chart, when you take out each of the previous reaction highs, that's bullish, and in doing so it would open a door for a move all the way up here to the 10 cent or so level. But either way, objective looking entry there, and you can have stops down below, maybe add to if the technical case starts to firm up. One thing I didn't mention in that last sector, although I spent a lot of time talking about trading the cannabis stocks, there are certainly some individual stocks within the sector here, at least on my watch list, that are just doing their own thing, either doing very well, some that aren't doing well, some moving lower. But for the most part, I've noticed this sector, like many others, when it's hot, they're all hot, and they tend to move together. In other words, you saw this big run back here in 2016 leading up to the election. You saw a sell-off for the most part in the majority of the stocks after the election. Right here, that is November. That I had anticipated as being the fact we had a huge run-up, a buy the rumor, sell the news event. And since then, there's been a lot of consolidation. Some stocks have moved higher, some have moved lower, but for the most part, have traded sideways. And I've made that clear in the trading room why I haven't updated, why I haven't been as active in posting videos and charts on the cannabis stocks. It's just a time they're digesting these huge gains. And that's overall, longer term, that's healthy, as long as these chart patterns remain constructive. Okay, CNBX, Cannabis Pharmaceuticals Inc. And this one looks like, well, there it is, divergent high. You can see a well-defined trend line. Prices are challenging that trend line now. There's certainly room, if it would like, for this wedge to extend to higher levels if prices hold here. But it's hard for me to say whether this one breaks down or not. A couple things that I note, as far as trend indicators, I often talk about when the PPO is above the zero line, as it has been since all this time here. The trend is bullish. When the PPO is below, like it was here, the trend is bearish. So bearish. It's bullish and has been, and as long as it remains above there. So pretty much there's two things are going to happen here more than likely. It's either going to break down. You see the PPO cross below there indicating a new bearish trend. The 50 level on the RSI can also do a good job of acting as support or resistance when tested from above. So there's your bearish case. So if you're already long, or you want to go long here on trendline support in case it holds, then have a stop somewhat below. But again, reference my notes on the first videos regarding stops and things like that. And then the other option is we hold support and this thing pushes its way and continues to work its way up within this wedge, possibly putting in, another lower high, continuing that divergence on both the RSI and the MACD. That's just one of many scenarios, but the facts are what they are. Here's a stock at support, although it had recently put in a divergent high. And keep in mind, it did correct after that divergent high, so maybe that's all it needs. In a strong bull market, remember, negative divergences, bearish chart patterns, and all that tend to play down to either not play out at all, or play down to the minimum side of their expectation or measured moves. So that's CNBX. Moving on, THCBF, THC Biomed International, another one that was virtually no trading at all until recently, and had a little run up here. And in story on this one, it's been working its way. It's been consolidating in this range here. And as you can see, I have a downtrend line to watch. So a pop above this downtrend line would be a buy signal. You have resistance just above at 74.5 cents. Then the all-time highs are at $1.07, about 107.5. That would be your next target, and bullish if and when that level's taken out. MJNA, this one I like, traded a lot. I mean, I'm almost certain we had this one as a trade idea in the trading room back here on a break of this primary downtrend line. It goes all the way back here. You can see when I jump to that 2-day period chart, that just gives us 4 years. The rest of the charts I'm on here are daily charts going back 2 years. So that's that. Pop there, it ran up about 75%. And it just has a series of, downtrend lines, and then it breaks and runs. Downtrend line, consolidation, work off the overbought conditions, break and run. It had that huge run up from that last downtrend line break, which again, I believe was highlighted in advance, and that was about a 480% run. Then you had this uptrend line here, well-defined, a lot of reactions, couple of momentum overshoots, broke down, and overshot this support level a little bit, but regained it. And that's still a level to watch, as is just above here. If you look closely, you see some reactions here it's holding. So here's one you could take a shot at. Trend is right now, at least this trend indicator is bearish, and the near-term trend is down after that trend line break. So again, I wouldn't go crazy on these things right now, but if you want to start adding exposure, I know a lot of you are concerned because the ETFs that are going to come out soon will have to gobble up some of these. And that brings me to another point. If you have any that aren't on my list, particularly larger capitalization companies, because the ETFs, I don't know I haven't seen the prospectus and what their the inclusion criteria are for the stocks, but if they're allowed to buy, and I imagine they might have to be, a lot of these pink sheet bulletin board penny stocks, over-the-counter stocks, maybe they will include some of these, but these have such small market capitalization. Yeah, they're going to be moved if they are included in those ETFs, but the ETFs tend to flock towards the more liquid companies, just because they need that for the liquidity, and not being able to, not having to move the market just by positioning in and out of those positions as they get inflows and outflows into the ETF. So it's going to be quite a challenge. It'd be interesting to see which ones they hold. But again, if you guys have any, especially any of these stocks with a decent market cap, please let me know if I don't already have them on my list. So there it is. There's your support levels. There's your next target. Needs a breakout of those recent highs to really go. Pullbacks, well, here's your next support, and then a really pretty solid support level here around 0.078, so you want to step in a little bit above that, around 8 cents a share. If it gets down there, I think that'd be a good area to accumulate. But remember, I always say this: have plan A and plan B. If your plan A was, okay, I'd love to buy this stock. If it drops to 8 cents a share, great. If it gets there, you're going to be happy. However, this thing may never look back. And in 3 years from now, if it's trading at $5 a share, $3 a share, whatever it is, you're going to be kicking yourself because you missed it by a few pennies. So that's plan A, but to have your plan B if it holds support here and continues to move higher. One thing we could do here is add a downtrend line too. Right there off these highs. So a break of that downtrend line could spark a rally up to that move up there. That would be an objective buy level as well. PHOT, Grow Life, downtrend line, breakout and run from that breakout. This is about 420%. Here's another downtrend line. We broke out, ran into resistance. This is a key level. See that 2 cent? That's 0.002. Look at the number of reactions as I move my cursor to the left. So many reactions at that level. We've had a few brief pops above it, but the stock has really, that's just one giant basing range here. And I think it would be a uber bullish event if it can clear that level with conviction. So right now we broke above this downtrend line. We back tested it. So what you're looking for on this one, there's two objective buy levels I see here. You can buy at the bottom of that support range right here as I'm drawing this purple line. That's right there around 8 cents, 0.008, that is, 8/10 of a cent. You can buy it down around the bottom of that support range, or you can buy it on a convincing break above the 0.002 or 2 cent level. Look for a breakout above that level. Until then, you're in a trading range, and the stock's been in a trading range for about 2 years in there. So you just have to have patience with these things. You can either swing trade them or long-term trade them. I do both. OGI.V, Organigram Holdings, there's an uptrend line, breakdown, that was bearish. However, you have a downtrend line here. So there's a couple things to note. 235 is a support level. It was briefly taken out, little stop run there, and it snapped back above there. So that it's bullish. I like to see when there's a well-defined support level that's broken, it flushes out weak hands, sucks in some shorts if anyone's brave enough to short these things, and then to see it regain that level, that's a bullish technical event. It also broke above this downtrend line recently. It's back testing. That's bullish as well. This is about as objective as it gets for an entry. You buy here, it's right above that level now. 247, that's about as close to 235 as you need to try to get with these things. You don't try to nail the exact penny. So you can go long here for a move up to 353, 447, the previous reaction high, and if that's taken out, then it's smooth sailing. You can also set a stop below. If you zoom in, you probably have to go to a 60-minute chart to see this better. There's a little minor uptrend line there that comes in with that 235 support. Solid break, especially a close below, would be bearish and may send that stock lower. TWMJF, Canopy Growth Corp. There it is, a little very narrow symmetrical triangle pattern, breakout and a rip, another triangle pattern, breakout and a rip, another triangle pattern here. I just extended the line, that's all. You can see the triangle there. We had an uptrend line as well that was broken. So here's another stock. It trades well to the technicals. Draw these trend lines. So our next trend line's right here. That might even connect. Yep, sure does, to that high. So there it is. You just do this. Set a price alert. If it breaks above that trend line, keep an eye on it. Ideally, you'd like to see it on above average volume, but that's not always necessary. It just helps to validate a breakout. You could probably draw another triangle here with this line. So here's the likely path for this one. Either breaks down from this trend line / triangle, hits that support level. That would be your first objective add-on level. If that fails, the next support's down here. And if it goes much lower, then that's just doesn't look good. This stock's made some nice gains. It's in a clear uptrend, and I would like to see at least this level hold. So here's your objective buy level. So break above this triangle pattern / downtrend. Pull back to this area around 550. Worst case scenario, maybe you scale in, you add fractional lots, adding your last lot here about 425 with a stop somewhat below. CRWG, Growgeneration Corp. Not enough trading history for me to render much of an opinion. This one's only been trading for a few months now. You could start to form a downtrend line. There's not a lot of reactions for me to really give that trend line a lot of validity, but either way, it's possible. Also, you just look at some horizontal levels. You have resistance here. That's nice because this horizontal resistance level right here, you can see it acted as support, finally support broke. Once support's broken, it becomes resistance. So what I do like about this is you have intersecting potential downtrend line resistance. We only have the third touch now, 3 reactions, and that's a minimum for me. Any 2 points can be connected by random. So in my book, at least, it takes 3 reactions on a trend line to begin to validate that. And then from there, the more reactions, the better. With that being said, so at this point, you have potential intersecting resistance, and I like to see that. Better to see 2 resistance levels taken out at once than one, and that may be the case here. If that happens, then I'd give you a target for swing traders. This would be my first target here, around 248. I always set my sell limit orders just below. I don't try to eke out the last penny. Also remember that when you have a sell limit order, your order, it's going to be filled at the bid price. You buy at the ask price, which is a higher two. So if this thing runs up to 248, which is the top of that range, sometimes, and I have been filled at the high of the day on sell orders on long positions, so sometimes they do fill you there, but I'd better to just set your profit target a little bit below. And again, that's swing trading. That would be my minimum swing target if I take this one long there. And that's about a 17% gain. And for your longer term investor, you hold on. And also, if you get the time, if you're in these for the long run, do your own due diligence. Do a little homework. There's a ton of information out there online. Easy to find out, everything you can about these companies. And don't forget about, don't just limit yourself to sites like Yahoo and some of the Yahoo Finance and some of these other sources, especially the marijuana sites that, it's like gold bugs like to go to these gold bug sites where they're permanently bullish on gold. You're going to have skewed research. Go to the company's website, look at the company's press releases, in doing your due diligence. That's some of the best sources sometimes for information on these companies. CNAB, United Cannabis, here's a stock with a series of downtrend lines, breakouts, and rips. Downtrend line, breakout, and rips. I mean, wash, rinse, repeat, guys. This is what you can do in swing trading, and these are all levels. So up until now, we had a series of downtrend lines that were objective long entries when broken, but most recently we're looking at now an uptrend line which has been broken recently. So that's bearish. It also fell. It had taken out this resistance level, which is now support. So this stock needs to regain both that resistance level around 184 as well as that uptrend line, and then if so, that could open the door for a move up to test these previous highs and around $3. And if they takes that out, then it could run. DEWM, Dewmar International, same story. I could draw a trend line there. Well, I have one here, here, here. Trend line. This one broke out, didn't do much, fell down, then ripped. There's a lot of whippiness. This is a low price, thinly traded stock. It's only 0.2% or 0.2 of a penny. So keep that in mind when trading. But there's your trend line to watch right now. And if you want to know the most objective level to buy, well, either on a trend line break or, more importantly, look how many reactions. Look how well this support zone. There's these little flush out moves, and you got to ride them out. Most of these just were intraday and snap back. That's probably just an errant fill. Probably somebody putting in an order that was outside. I don't even think a broker will take a market order on a stock like this, but that may have been filled that way, or somebody typed in the wrong, an extra zero or something got filled down here. But for the most part, you can see this is where the stock grabs support. So you can buy it down there and then you sell the next rip, or one day maybe this thing gets some traction and goes on to take out these previous highs. We could probably even draw up, wrong tool, probably draw a downtrend off the highs here. Not crazy about it, so let's just not even use that one. There's not enough reactions. Moving on, CHUM, Chuma Holdings. need to update that. And some support around this area. I'm not crazy about this chart. And this is a long-term, a primary downtrend. So on this one, you need to see this downtrend line go to really open the door for move up. And this 0.815 level, there's been a couple reactions there. If that gets taken out, first target would be this level up here at about 14 cents, almost 15 cents a share. And then ultimately, I could see that one moving all the way up here to about 43 cents. CGRW, let's go back to a daily chart here. There's, very well-defined downtrend line. Look how many reactions. That's what I said earlier. The more reactions, the more valid that trend line. So that break was a no-brainer long, and I believe we traded these. Another downtrend line break. Boom. I mean, just a tremendous move. Some of the profit potential in these things is enormous, and just got to just spread it out. There's a 424% rip in, 2 weeks maybe? Then the stock, had a pullback. It was a downtrend line, well-defined price channel, descending price channel, broke above that, ripped. And you can see now there's several reactions here at this level. So your next buy signal, or next, I should say, a move above that would certainly be bullish. Right now we're flirting with, there's quite a few reactions on this level here. And so about the 1.5 cent, 1.5, $1.50, I should say. I'm sorry, $1.50 or so. We're under that level now. It's acting as resistance. You can draw a little downtrend line here, sort of like an ascending. This is like an ascending triangle pattern. So maybe on a pop above 150, we run up there. And if we break down, then we go back here. So here's your buy zones. You either wait for a breakdown, try to buy it here in this buy zone, or break out here, and you run it all the way up here to about that 230 or so area. ACBFF, one of my favorites, still a long-term trade on the site. We started buying this one as an official trade idea. First entry was back at 55 cents, as well as the current long-term trade. And this one's up quite a bit from there. It's run as high as 400 and something percent. And like everything else, it's had a heck of a run up, and it's been digesting those gains in the form of a sideways trading range. So again, it's been correcting in time, more so in price. From this chart, it's pretty clear to me it needs to take out this level about 213, and that would be bullish. And I'd like to see it remain above this 150-ish level to keep the bullish case intact. All right, ERBB, American Green, nice series, big primary downtrend line here. This I jumped back to a 4-year chart. This goes back to 2014. The downtrend line coming back to a daily chart, 2-day period. You can see we had a smaller price channel below, popped above that. That was your first buy signal, blasted right on through that longer term uptrend line and just ripped. I mean, from low to high in just a matter of a few weeks, that stock went up 1,000%. Hit resistance. Look at these reactions right here. Hit a little bit of an overshoot, pulled back down, and now there's this downtrend line that's formed with 1, 2, 3, 4 reactions. Just recently broke above and back tested. That is an objective entry right there. Back test. Now, back tests, the painful thing about them at times is prices can continue to back test at lower levels. So this one might want to work its way down, but this is very nice support down here, this level about the 0.001 cent. So you take a shot here, wouldn't take a full position, leave room to add there. However, if the back test is successful and we take out the previous reaction high and some of these resistance levels, then you can add to the position. That's also objective. So remember, plan A and plan B. All right, Aero, A-E-R-O, Aero Grow International, very well-defined uptrend line. I mean, look at the number of reactions. So this one, going back longer term, you had a well-defined downtrend line, broke out, back-tested. That was bullish. It held. Stock moved up. From the lows just back around the beginning of the year, late 2015, that stock's up about 534%. So it had a heck of a run, and it digested those gains, and more so both in time and price, in this downtrend. So there it is. It's been in a well-defined channel. There was this bear flag pattern in the middle here. You can see flag broke down from the flag, but recently we had a bullish development. This one just broke out. and broke above that well-defined downtrend line / price channel, took out the 293 resistance level. There's some levels here. I might not have updated this chart recently. You always look at these previous reaction highs. That would be your first target there, about 327, and then any of these levels up here. So this one looks good as of now. If it comes back in, if there's a little more downside in the sector, this is great support here around 216. So you might want to step in a little before that level. I can see a lot of reactions back here. So that's Arrow. CBDS, Cannabis Sativa. Well, you can see the trend lines, uptrend line. There were downtrend lines. This was your buy signal. I mean, these things were super tradable, just working well to the technicals in the past. Broke that trend line and just had a huge rip. Came back in, consolidated, digested those overbought conditions, moved back up again. But the bigger picture is this purple downtrend line, bearish rising wedge. You can see the divergences I have marked down below. So we had a divergent high, another second divergent high. That started playing out in the form of a correction. So now I'm watching this downtrend line. That if that breaks, that might take us down here to about this level. And if not, you can see very nice support right here at about just above the 350 level. If this holds, the next buy signal would be a break above the recent highs. That would take us higher. And if not, boom, look to buy here at any of these pullbacks. But I'd probably keep a stop somewhat below that 350 level. EAPH, just another beautiful chart. Look at that downtrend line. Very well defined. That was a breakout. Initial target zone blasted. We flagged right on it. We hit it. You zoom in, you can see that bull flag consolidation, and then another thrust up, pull back, and it worked its way up within this very clear. This is a clear bearish rising wedge pattern confirmed with negative divergence. That broke down. That was your sell signal. That was your time to get out if long. Pushed back up, back tested the wedge, and we've rolled over since. So this is one that just came up too much too fast. I don't care how good the fundamentals are. That stock went up 3,500% since October or September, late September, early October, and it's working off those overbought conditions. The wedge is playing out. Any or all of these are pullback targets. Ideally, I'd like to see this one hold here. So if you could get this stock down about 0.019, that would be a good entry. Or this level here, 0.02, you can't see it here, 0.0236. Buy a little bit above that, and that might work. And you can also draw a potential downtrend line that's setting up. So let's move this line at this point. You can watch for a pop above that. That might do the trick as well. And as well, watch for the PPO to cross back above the zero line. SPRWF, there was an uptrend line. It broke. So there was divergence at the top. You can see the negative divergence. Well, you see it drawn right here. And this one has been consolidating sideways for a while in this trading range, working off the overbought conditions. I can tell you with confidence, nothing is guaranteed what the stock will do, but I can tell you with a high degree of confidence, this is a very well-defined resistance level here, that recent high. Let me give you the number. That's at about 140. We'll call it 144 to be safe. Break above that level would certainly be an objective long entry because that's that sideways trading range it's been in for months now, and that would open the door to new highs. All right, I think we have just a couple more here. MJN.V, Pharmacan Capital Corp. So here's one that may not grow cannabis. It may provide capital to these smaller companies, these startup companies. Again, I don't know. Do your own due diligence. This one trades on the Canadian Venture Exchange. Uptrend line. Now, this is the pattern that I'm really focusing on right now. Oops, must have clicked on my erase tool. So I had an ascending price channel I showed you, which I just erased a minute ago, a little uptrend line that was broken. So this one's working its way up within this ascending price channel here. Bearish if it breaks below here, an impulsive break and close. But if it does, then you just look at the reactions, find some support. This would be a solid support level around 191 if it breaks down to add to. And it may continue to work its way up. But what gives me pause, see the negative divergence, that's what gives me pause, and I would rather wait on this one for a breakdown of that ascending price channel than to buy here, even though it's on support. Like I said, that would be your first objective long entry. Next one would be down here at Show you the number 136. MCIG, nice trendline breaks, rips, bearish rising wedge, confirmed with negative divergence, which has played out. Again, this is the reason I've been cold to lukewarm on these things for a while now. They needed this. They've come up too much too fast, regardless of how much long-term potential there is for these companies. And you're at support now, so around 21 cents or so. It's held that support once, a brief intraday overshoot, but we've closed several times on it, so that's certainly an objective level to initiate some exposure. If that level doesn't hold, you can see my next level down here. And I would really want to see this level, worst case scenario, this level hold here around the 10.5 cent share level. OGRMF Orogram Holdings, very well defined uptrend line which has been broken. That's bearish obviously and has played out that way with the stock correcting since then. Let's see if I can draw. I haven't updated a lot of these charts. I have so many. There's a little bit of a downtrend line. I meant to use a line tool instead of an arrow tool, but there's a level you can watch. If that breaks, you can see all my targets. Of course, the big number here is the previous reaction high, right there around 328, 320 or so, 330, so call it. But again, you had that divergence high, and that was long-standing divergence. It's playing out, may have more to play out, maybe not. Last place I'd add to this stock is down here about the $1 level, 103 roughly. May or may not get there. If it does, that would be an objective area to add on with a stop not too far below. TBQBF, Emerald Health Therapeutics, thinly traded until recently, like everything else, some volume coming in. There's my levels, support. I'll give you the numbers. Sorry about that. Every time I hover, I'm using only part of my screen, so the pop-up box goes to the left unless I come over here. So there's your level, 0.583, so 54 cents. This support here is at 76, and there's a downtrend line to watch, which would be bullish if broken. That would be your next buy signal, or you can buy at any of these support levels, but I don't want to see it go much below there. That would not be good for the longer-term outlook. MCOA, Marijuana Company of America. There was a triangle pattern, broke out, ripped. Here's another triangle pattern. That's pretty simple, straightforward, guys. There's your next buy signal, is a break of this triangle pattern. My drawing tools aren't working well today, so there it is. Pop above there would take you to the previous high, and if that gets taken out, that opens a door. Downside break, of course, would be bearish. That might take us down to the 0.015 level, which is support, and may hold, and ideally would hold. So that would be your next objective add-on area, maybe with a stop below that if that doesn't hold. Cara, one of my favorites. I've traded this one mostly long, recent short pullback. But there's news on Cara. They just announced a stock offering. That means it's dilutive. They're issuing more shares, but that's good. It's to raise money for research. They have a few drugs in the pipeline. This is a pharmaceutical or biotech company, painkillers. I've talked about it in the past. I don't want to get too long into this video on fundamentals, but I like the longer term story. It recently popped above 818, but now they announced that stock offering. So zooming in, here's an uptrend line to watch. Hopefully that holds, but I'm not too optimistic because see this negative divergence, we still have a divergent high. It was bullish when it took out 1810 the other day, but now that it's fallen back below, that's bearish event number 1. In fact, it put in another divergent high number 2. So an ideal scenario, we don't always get what we want, but would be to see Cara pull back here to that 1444 area or 1335, somewhere in that area, and then reverse. So that would be an ideal buy zone somewhere in there. I think that would really work out. It would have helped those divergences played out, this little wedge play out, and I do like the long-term story, and it would give this one a little more time to consolidate and digest these recent gains in that area there. Two more, ENRT, trend line, breakdown, sell off, uptrend line. So this is a trend line to watch. The stock has currently been defending this support level here about 0.0684. If it breaks that, that's bearish. Then watch for that trend line. Great entry point if it gets there on this one, or at least an objective entry point, I should say, is right here. That's about 0.463, so you want to step in a little above that, about 5 cents a share. There's reactions all the way back here, reactions here, and that would be a nice buy target there, or add-on area. ATTBF, very well-defined support zone just below it. So you can see the reactions back here. When there were some reactions, quite a few reactions that acted as support, and that's right around the 10-cent level. So that's your most objective area to buy this stock. Anytime on a pullback to 10 cents, and or right here around 10 cents. And if it goes below the bottom of the support zone, you might want to let that one go. We had a divergent high recently, but those divergences did play out. We might need to correct a little more in time, so you just have to be patient. If you buy at 10 cents, be okay with it if the stock does this for a few months. Just skates along that level, as long as you don't get stopped out. And then your price targets would be first target, this line here, right around 18, call it 18 cents, 18, 19 cents. Next target would be the 28-cent level. If it takes that out, then it's blue skies above. Okay, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.